And also, Apple faces tax demand as EU to rule Ireland deal was illegal. Ireland and Apple. They've been here for quite a long time and they employ a lot of people. But the deal has been investigated. Let's go to leader of the Social Democrats, one of the three leaders, and that is local TD, Stephen Donnelly. Good morning, Stephen.
Declan, good morning.
Good morning to you. So Apple faces tax demand as EU to rule Ireland deal was illegal. What's this deal that was there in the first place that they might see was illegal?
Well, we don't know. The government has consistently said that no deal was done. I believe the revenue commissioners have said the same thing. It was alleged in the US during Senate hearings some time ago that some special deal had been done. The chief executive of Apple appeared at those hearings and said no deal had been done. So we took it that, no deal had been done, but that Apple was availing of loopholes between Irish law and US law, mainly to avoid paying an awful lot of taxes. And so it has come as a bit of a surprise that the European Commission has been looking into this, has taken Apple to court. And it's come as something of a surprise, I think, to a lot of people, that it looks like they may be saying that a special deal was done. So we'll have to wait and see specifically on that what they mean. It might come down to semantics, whereby the Irish government, I think, are very clearly saying, look, they availed of the law. Now, I don't believe they used the law in the way the law was meant to be used. The loopholes were found, is the conclusion I've certainly come to. The Commission might be calling it a deal because they used, different tax law in different jurisdictions in that way. We'll have to wait and see what they come out with in the next few days.
A loophole, so a loophole is not illegal, first of all. It's just a loophole, isn't it, until somebody closes it. But secondly, isn't it up to the Irish government to define whether the deal is done or not? Why would you chase after Apple, who maybe availed of a deal that maybe did or did not take place? They're just the people who go along and give us a deal. It's the Irish government, if there was such a deal, should be the ones pursued.
Well, yes, it's a very good question. I guess the two different parties, the Irish state and Apple, would be sort of pursued in different ways. What the Commission might be saying is that Ireland is guilty of providing illegal state aid to Apple. So one of the ways that the European Union works, one of the rules that are taken quite seriously, is that there's free competition or healthy competition across the European Union. So what that means is the Irish state isn't allowed to give preferential deals to Wicklow-based companies to do work in Ireland, any more than the French government is allowed to do the same with French companies. And the idea is that therefore the Irish companies can compete alongside French companies in France, and similarly they can come and they can compete with our companies. So that's the basic idea. And so the Commission is looking and saying, well, hang on a second, actually you're giving illegal state aid in a way that is against the rules of the European Union, and that's not allowed. So that's how that's the finding they would be making against the Irish state. The implication of that, however, then falls back on Apple, where they would be saying, well, Apple, you haven't done anything illegal. However, you have availed of a deal that that the Irish government had no right to give you, and therefore you have to pay your taxes. So that's how the two different parties would potentially be affected by this. How
much of the 12.5% did Apple pay or not?
Well, very little. And we have to be very careful to strike a balance here, because as we all know, the 12.5% corporation tax rate is a highly competitive international rate. It's one of the ways that the IDA is able to attract this foreign investment into Ireland, into Wicklow and around the country. It's described regularly as a cornerstone of Ireland's international enterprise policy. And certainly I and most of the political establishment and most if not all of the business sector would say you have to leave it alone. It's a very important part of our tax structure, and I would certainly agree with that. The problem is, and Apple, by the way, as we all know, employs a lot of people in Cork doing real work. The problem is Irish tax law has been used in conjunction with other tax law, including US tax law. So the US tax rules are very much part of this as well. But a combination of different tax laws have been used to allow companies like Apple pay very little tax around the world. So at the moment, for example, they have a cash pile, an offshore cash pile of several $100 billion. We had a situation for a few years where Apple were doing something which again may have been legal, but certainly was not intended by the people who wrote the tax law, which was they were able to use a combination, I think from memory, it was Irish tax law and Californian law, to claim that they actually weren't domiciled anywhere for tax purposes. It had something to do with if you're domiciled in Ireland, but your company management is run from California. There was some combination that basically allowed them to say, we don't exist anywhere when it comes to paying tax. So we're not going to pay tax to the American government. We're not going to pay tax to the Irish government. We're not going to pay tax to anybody. Now, clearly that is not an acceptable situation. You know, companies in Ireland, companies all over Wicklow, they pay their taxes. They pay their 12.5%. They then pay another amount of withholding tax. So if you own your company and you're paying your dividend, you actually end up paying 30% on your profits by the time it gets from your company into your bank account as post-tax. So there's very few people would stand over Apple or anyone else paying no tax. And then there's the in-between bit. So we're all happy more or less with them paying 12.5%. I haven't found anyone who's happy with them paying no tax. There's then this other amount which it gets moved through Ireland. And Irish tax law is used to facilitate them paying a very low rate globally. Now, personally, I don't agree with that. I think you got to pay your taxes. I've been campaigning very hard over the last few months on these vulture funds who are avoiding paying taxes in Ireland on profits generated in Ireland off the back of families in Wicklow and all over the country. In the last budget, it was the last one or possibly two budgets ago, this zero tax issue was shut down. So that's to be welcomed. And the other thing that's happening is the OECD is running something called Dept. You'll hear people talk about Dept a lot, which is base erosion profit shifting. And basically what it means is this tax avoidance is an international thing. It rarely relies on, just Ireland's tax laws or the Bahamas tax laws or the US tax laws. It seems to rely on a combination of international tax laws, and it finds loopholes by joining them together. And so the international community, via the OECD, is saying, look, we need an international response to this. So we had a subcommittee in finance a few years back, and we had international experts come in, and we had the OECD report into us by video link as well. And what we were told was, they said, look, you in Ireland could change all your tax laws. You could try and shut down this 2% or less that Apple and others appear to be paying, but they'll just move it somewhere else immediately. So individual countries, particularly small countries like Ireland, making changes isn't actually going to stop these big international sophisticated corporates avoiding paying their taxes. What you need is an international response. You need a multilateral response. And so Ireland has fully signed up to this BEPS process, which is being run out of the OECD.
And it won't really happen until everybody signs up.
Yeah, I think rather than any one country, pushing forward very quickly, the approach that seems to have been agreed is that we all take steps together. It will take longer, but that over time you shut it down, because quite frankly, it's not right, in my opinion, that these companies would be paying, between 0 and 2%. It's not what was intended when people wrote the tax.
Well, listen, we'll return to the subject when we hear what the statement will be on that, whether we've to pay a bit of a fine or will get a windfall or not. We'll see what happens anyway over the next 2 days. But there's one thing I want to ask ask you about, Stephen, from last week, and this was some information received under Freedom of Information about the USE being phased out and the consequences. And inside the Department of Finance, they were saying, well, if you phase it out, there'll be things like the property charge will have to go up by about 600%, and you'll be paying more for your petrol, more for your alcohol, more for everything if the USE is being phased out. What's your view?
Yeah, well, this was one of the big issues that you and I discussed during the election, Declan, which was Fine Gael were campaigning very hard on this promise that they were going to abolish the USC. And what I said at the time, and I said it on your show, was that this was a false promise, that they were promising US-style taxes and European public services. And that doesn't exist anywhere. And I felt it was very dishonest. I felt it was very dishonest campaigning. We called it out, and we got a very strong response in Wicklow during the election, all over the county. You know, I was talking to one TD from a different party in the Dáil. He pulled me aside in the corridor and he said, "Did I hear that you're going to campaign on not cutting taxes?" And I said, "Yeah, well, we are. It's the right thing to do. We need a stable tax base." And he said, "Yeah, I know that, but you can't tell people that." And, you know, I decided, and we decided, well, actually you can, because we need a stable tax base. We saw what happened the last time our tax base got eroded and we were overly reliant on property tax. And the reaction from people was very strong. Now, what Pierce Doherty got under Freedom of Information was a report to the incoming government saying, you know, basically, if you want to keep this promise, you've led everyone to believe that you're going to abolish USC very quickly. Here's some of the things you'll have to do in order to get the money back, assuming you don't want to close schools and hospitals and Garda stations, because, you know, you'd be knocking 4 to 5 billion euro out of the tax base. And it made for very sober reading. One of the options, we were just talking about corporation tax, one of the options was you could increase corporation tax from the current 12.5% to nearly 20%. Another one was that you could move income tax up by 5 percentage points, so from 20 to 25 at the lower rate and from 40 to 45. And then there were other options where it put a bunch of them together. One of them was petrol and diesel up by 18 cents in a litre. A pint of beer up by 150, spirits up by £1, VAT up again on the tourist sector, VAT up from 23 to 25%, 5% in children's shoes. And I think the point the officials in the Department of Finance were making was, you guys have gone out and you've promised to abolish this tax that brings in billions and billions every year that's used to run the country. Here are the kind of things you'll have to do to replace it. Now, the government has come out since and said, yeah, but that was before we decided we'd phase it out and, you know, we're not going to do anything drastic. But to me, what the memo did was highlight starkly a very dishonest, I felt, position that got taken during the campaign. That people, when I certainly around Wicklow said, no, we'd keep the USC, but we'd make sure that the money was invested in services, in supporting businesses, in supporting communities, and critically that people's taxes were spent well. They reacted very strongly. A lot of people on the doors in Wicklow, Declan, they said, look, we don't mind paying our taxes. We don't mind paying the USC. We don't mind paying our income taxes. We don't mind paying VAT. We don't mind paying these things as long as the money is spent properly, as long as it's not wasted. If it's being spent on teachers and it's been spent on doctors and nurses and roads and broadband and social protection and state pensions, then that's great. But please stop wasting so much of the money.
Yeah.
And I think that's the big thing that needs to be done. And as I said to you during the election as well, we do have to put money back in people's pockets. It's not just enough to say we're not going to reduce taxes. But the way you do it is you reduce the cost of living. And since the election, motor insurance, home insurance, all of these things are coming up now and are getting, you know, people are really beginning to focus on them. We have to take a very hard-nosed look at the costs of living, at the cost of childcare, the cost of insurance, the cost of doing business. If you drive them down, you put money back in people's pockets just like you would by abolishing the USC, but critically you hold on to money to invest in services.
All right, Stephen Donnelly from the Social Democrats. Thanks very much indeed, Stephen.
Thanks, Declan.
Good morning to you. And we'll indeed see what happens in the world of Apple as the week goes on to see what the situation is. Maybe we're going to have a big fine, or maybe we're going to have loads and loads of money, though it's been talked about that if we do get loads of money, that Apple have to repay us for the sweetheart deal that they may or may not have got, that it'll just be used to pay down the national debt and not put into short-term services. If you've got a view, 087 77 11 103. What do you think of that? Anyway, is it worth having multinationals in, give them sweetheart deals in order that we get employment so you can get a job, so you can pay your taxes and live? Well, your view, 087 77 11 103.